everybody, welcome to the Dialed In Show. This is Drew Dial. We are a special on location.
Yep.
Is that what they say? We're on location at Parker Mortgage in downtown Noblesville. I'm here with Mike Partin.
Hey everybody.
Thought we'd ask some lending questions, a little bit about their company and how they can help you guys as a prospective home buyer. So Mike, tell me a little bit about Parker Mortgage, who you guys are.
Yeah, so we're based here in downtown Noblesville. So we're on the square. If you guys are familiar with Noblesville, the new Primeval Brewing is immediately downstairs. Nice. That was not an accident. And so we've got, 25-ish people on the team. So we do everything all right here in-house. So processing and underwriting and the whole shebang.
Nice.
So, yeah, it's awesome. Nice. And we have a 105-pound Old English sheepdog that wanders around the office that we just had to lock in the other room. So, yeah, if you guys like dogs, come by and see us. If you don't like dogs, just call first. We'll lock your way.
Sounds good. Thanks. So to the boring stuff.
Yeah.
2020 real estate market. What does that look like to you from the lending perspective? What have you seen so far into the year?
So let's start like December-ish.
Okay.
So December 2019 is when the market starts to cool down in the lending world, and usually December, January, February are our slowest months of the year. And I can tell you, last week in particular, we had 39 new submissions.
Right.
So to give you some perspective, the year before, we didn't close that many loans in the month, and we had that many come in a week.
Right.
So market is absolutely on fire right now. It's crazy. We're running into a weird problem that this is my 20th year doing mortgages. I've never seen this happen before, where we have tons and tons and tons of demand right now. Supply is still not looking great, so not enough people selling their houses.
Right.
But I think overall market factors are seeing houses are appreciating at a decent clip, which is finally convincing some people to get out of the houses that have been sitting on for years and years. So so the market, I think, is, knock on wood, doing fantastic right now.
Okay, so it's not just me. I've been saying the last few weeks the spring market's here already. So.
Yeah, it's crazy.
I'm saying it too.
Normally we try to take February off and hang out by the lake.
We got a Vegas
can't
trip
do it this year.
Yeah, right, exactly.
We usually hang out by a lake. It's really cool.
So if you've seen any of my videos, I'm always saying first step, even before calling me sometimes, is contact a lender to get pre-approved.
Absolutely.
What does that pre-approval process look like here at Parker Mortgage, and why is it so important to do it?
Absolutely. I think that the pre-approval process with us looks a lot more like talking to a friend.
Okay.
So we spend a lot of time, I don't think people realize how many mortgage programs there are.
Right.
There are literally thousands. And then when you throw in all of the ways that we can help structure a loan,
Sure.
then, I mean, we're into the millions. And then what we do a lot is we work with, almost exclusively with realtors. And so we're not putting billboards up and running internet ads. We work with our realtors to help their clients get into homes. So because of our strong realtor partnerships, I feel like we're able to structure loans a little bit differently when kind of everybody at the table is talking to each other. And when I can take my clients' goals and I can say, hey, this would be great if we could help structure it like this. Drew, do you think the seller can do this and this? And we get all these puzzle pieces together. Man, we can move mountains. So, we've got programs right now where I can do no money down with no mortgage insurance.
Okay.
So things like that are dominating the market right now. It's getting much, much less today than it was 5 years ago. FHA, VA, conventional, here are the buckets. Which bucket do you want? Now, and the market is very dynamic. So partnering with somebody, whether it's us or another lender, get started early and start to have these conversations, because I promise you, you don't know what you don't know. Like being in the lending game, these programs are changing every day. And so to be able to stay up on what's happening as a consumer, I think is almost impossible right now.
So you mentioned, get started early. Like how soon is early? Like, month ahead, 2 months ahead, a year ahead?
You have to be 18 to sign a mortgage.
Okay.
So you start then.
Yeah, okay, got it.
I think realistically somewhere in the 60 to 90 days before you feel like you're going to buy a house.
Okay.
And the reason I say that is because people have stuff wrong with their credit that they don't even know they have wrong with their credit all the time. the amount of people that have errors on their credit bureaus are crazy.
Right.
And even if you feel like you're a person that has always paid your bills on time and you do great and you have good credit and Credit Karma is constantly saying, shut up. So you don't know unless you go take a look at it, and there might be something on there that's listed improperly. Medical collections nowadays don't really hit your credit score, so you might not feel the blip of that, but we could go in and help you get those kinds of things, I don't know, addressed.
Okay.
So I'm not a credit repair company. I'm not allowed to say that, but
Right.
we work with clients all the time to show them a roadmap of, hey, if you go do these things,
Right.
like there's no such thing as a no. There's only a not yet.
I love that.
And so, I mean, we can help people get, whether you're a 700 and we can get you over a 740 so you can get the best rates in the game. If you're a 540 and you want to get to a 580 to be able to buy a house.
Right.
So starting a little bit earlier than, hey, I found a house and I have an offer on it.
Yes, please.
Probably a good idea.
Okay.
So yeah, somewhere in the 60 to 90 day range is
Right.
usually pretty safe.
Okay, sounds good. So now once we've got the pre-approval, you started searching with myself and we're going out. We found that home. We're under contract. I send all the files over here to Mike and his team. Can you explain, like, what does that 30 to 45 days look like between we're under contract and then I get the keys and we get to move in?
So yeah, from our seat, kind of what it looks like is, you ever been to the circus? I mean, you got the guy with the red coat. So I had a couple red coats. So we just turn into a little ringmaster. So we become coordinators. So we have spent the time to work with you to structure what your loan needs to look like, and now we walk through the actual approval process. And so to give some perspective, because people get so emotional during this time,
Right.
it's not a matter of whether or not I think that Drew is a good risk and therefore do I want to lend him money. That's not it at all.
Okay.
You gotta put this different hat on for a second and think like an attorney, because really what we're creating is a bond, right?
Okay.
We're creating a mortgage-backed security. This mortgage has got to check all these boxes. It's got to fit all this government guidelines, and it's got to look a very specific way. And so when a lender comes back and asks for, hey, I need an updated pay stub. Hey, I need this, and they, hopefully we don't do that to you too much. Hopefully we do a really thorough job up front.
Right.
But I mean, people's lives are dynamic. You have so many weird variables that people run into. So we spend a lot of time with coordination of appraisals, your inspections happening during that time. I don't want to know about your inspection. That's for you and your realtor to make sure that house is in good shape. But we're going to have an appraisal done, and that appraisal is there to make sure you're not overpaying for the house, to make sure the collateral is good for the loan. We have to figure out where your down payment's coming from. We're kind of like a bank that we have to worry about stupid things like the Patriot Act and all of this, like fair lending garbage and all of the things to make sure that every T is crossed and I is dotted. But so lots and lots of that. So one of the things that I think we do an above average job on is really nurturing people through that process, because like I said, it is very, very emotional, and people get very freaked out during that point in time. It's like, does he love me? Are they going to say yes? Are they going to approve this loan? So in our world, we try to have the heart of a teacher, and it's something that I talk to my crew a lot about is, don't just ask for a bank statement. In our world, if you have a 5-page bank statement that says 1 of 5, you know how the 5th page is always empty?
Right.
So we have to see the 5th page, because I don't know that that's not where your 17 car loans are and your 4 timeshares in Muncie, Indiana. Like, I don't know what's going on. Right. So, but the heart of a teacher would say, hey, Drew, I need to see your bank statement. And if you have a 5-page bank statement, even if that last page is blank, I need to go ahead and send that in also. The norm in this industry is to say, hey, send me your bank statement. And the heart of a teacher, I think, really reduces that anxiety, lets people know what we're looking for, why we're looking for it. And then now I can look at this rationally and say, okay, that makes sense. Here's my bank statement. Now I'm not worried because I know what you're going to be looking for. So, yeah, anyway, I don't know if
that's good. You kind of answered it for me. My last wrap-up question is like, what's the one thing that sets you guys apart at, Parker? And you summed it up with the heart of the teacher. We're in this together. You guys want what's best for each and every family situation. So, and that comes through with everything you guys do.
So if you think about the Shane Company, he always talks about our people are not on commission. So it's like our loan officers, they make the same amount of money no matter what loan they choose for you, or you choose with them, or they structure for you.
Yeah.
So there's not like this profit being a driver for us. It is exclusively, I need to make sure that this deal is structured the best way possible for this client, because I want them to engage with us, and I get paid by bringing a loan in, and I make people happy by doing the right thing for their situation over and over. So I know that there's a lot of places that, you know, people have the perception that they're going to just charge you as much as they can get away with, kind of thing.
Right.
I think that's real important to know that that's not a thing. That doesn't exist.
It doesn't exist.
So interest rates right now are crazy good. They've been very good for a long time, and they're actually kind of took a little bit of a dive here as of late. So the market doesn't like uncertainty. So we talk about the stock market and your investments and your 401k and all that stuff. So when people start seeing craziness happening in Washington and things happening in China and just in general the world in dishevel.
Right, yeah.
Dishevel? That's not a word.
The shovel?
Yeah, something like whatever.
It works.
So when that happens, people macroeconomics, they take their money out of the stock market and out of uncertainty, and they'll put it in bonds for a minute and just kind of keep it safe. When that happens, it's very good for mortgage rates. And so crystal ball, let's look 6 months out. Something's going to happen in Washington. We have no idea what it is, but something is going to calm down a little bit there. And then hopefully the people in China get some antibiotics and things get chilled out with the coronavirus and that doesn't continue to spread. So when you start talking about some of those things chilling out, those are going to be forces that will move people back towards the stock market and make interest rates start to come back up. So I don't know, my crystal ball says go buy a house right now because the market is crazy good, super busy out there right now, and houses are appreciating really good.
Yeah.
So that house you waited last year, I don't know if you saw this statistic in Fishers, there was a couple zip codes in Fishers. Yeah. That house that you were thinking about last year cost $22,000 to $24,000 more right now than it did in January last year. That's crazy.
Right.
So think about the costs of waiting, and you're sitting on the sidelines right now and you're, oh, I can't find my dream house. Cool, go buy your daydream house and make it your dream house.
Right,
so get a renovation loan and go in there and gut the kitchen and make it what you want it to be. So
very good
I don't
point.
know. Yep.
Yeah. So that kind of wraps it up.
Yeah.
This was great.
How about you? Do you have any insight for us? What's the market look like from the realtor
The
scene?
market looks great, as you mentioned. The appreciation is just going through the roof, and it's not just Fishers and Hamilton County. Across Indianapolis, we're under contract with one of my listings right now. He bought 2.5 years ago, and he's experienced 30% increase.
Nice.
It's
better than his retirement fund.
Exactly. He got a job offer out of the blue, and 2.5 years later had to sell and thought he was going to lose money, and he's walking out way ahead.
Nice.
That's in the west side, the north side, Lawrence, where I'm at. It's across the board. The rates, the cost of waiting, those are conversations that we have with our clients too. Numbers and statistics show that it's the seller's market because of the inventory being so low. Sellers are in kind of the driver's seat, but it's the best time for a buyer to purchase their home. I remember a decade ago when my wife and I were buying our home, we paid down to get to a 5%. We thought we were just living. Now 5%, it's like, oh my goodness. So it's come a long way. This is a great time for everyone.
We have a lot of clients right now also looking into 15-year mortgages because rates are so much cheaper than what they're used to, and if you're sitting there in a 5%, you might be able to get you might be able to get the twos with a 15-year note, and your payment ends up being about what it was at 5%, and so. And then you look at how much money you save over the life of your loan. Holy cow! It's crazy.
And if you get started on this process, at a time in your life, where kids are so young and things like that. It's not just that you're getting a lower monthly payment and that feels good, but really set yourself up, your family up for future wealth and growth and just opportunities.
Absolutely. So, if your kid right now is 4 years old or less, think about that. If you refi into a 15-year, there's your college funding.
Right there.
You can just cash flow it because you won't have a mortgage payment anymore.
Absolutely.
So I love that strategy. Anyway, well, thanks for inviting me.
Well, thanks. I appreciate
fun
this.
With this.
Yeah. Thanks. Again, my contact information is down below or at the end of the clip. I'm going to have Parker Mortgage and Mike's information as well. If you have any questions for him or myself, feel free to reach out. We'll get you connected. Thank you.
Hey everybody, don't forget to like, comment, follow, and subscribe to however you're watching this content. Thanks.